What is going on, guys? It is Ahmed, and I am back today with an update on our current market conditions. Guys, I'm with you. We saw, again, I'm just looking at the S&P 500 index fund, and we saw, a pretty bad day in the market yet again. If we look at the 5-day, we saw it dip down on Tuesday. We recovered very nicely Wednesday, but it seems like that full recovery that we saw came crashing back down. Sorry, my nose is itchy. Regardless, if you look at the market as a whole, everybody, I think there are a lot of lessons that we can learn from this. People are pulling their money out of the market, pulling their money out of certain plays. That is, again, when money goes out of the market, the total market cap decreases, and in turn, we see, the market bleed. So there's a lot of uncertainty at these times. But what am I doing? Why am I not worried? And why do I think, again, any loss that you see in your portfolio today? I know if you're like me, you pulled up your phone, you pulled up your apps, Webull, Robinhood, whatever it might be, TD Ameritrade. When you pull up these apps and you look at this unrealized loss, you start, panicking and then thinking, where is this going to bottom? Is the market crash incoming? All these sentiments that are probably running through your head, and all these feelings and emotions that make you just want to sell out and not look back. But honestly, for me, what am I doing? I'm kind of keeping that Cathie Wood mentality. So what did Cathie Wood do? We know what stock got hit the hardest yesterday. That was Workhorse. What happened to Workhorse? Let's look at the 5-day chart. Guys, it was at $33 a share, and once the USPS contract did not go to Workhorse and instead a different company, that caused the stock to just plummet. Because we know this was mainly, look at this, a 50% loss, 55%. But guess what? Instead of, deciding to sell their shares over at ARK Invest, what did they do? Look at this article here from Market Insider. Markets Insider talked about how instead of this 50% decline, what did Cathie see it as? A buying opportunity. So I tell you guys, in companies you believe in long terms, we need to start adopting this Cathie Wood mentality. The reason I like Cathie Wood so much is that she's really a huge disruptor in this space. Look at her index funds, ARKG, ARKK, ARKX. All of these are coming, they're up and coming, but she's investing, she's putting money into companies that are not a 1-year hold, not a 5-year, a decade, 2-3 decades out, long-term holds because they have long-term potential. So again, when we adopt this mentality, when we have that that psychology basically that she carries, that instead of selling on a dip or selling from panic, from fear, we're buying the dip. Let's look at our plays that we've been focusing on in the on this channel. Jaguar Health, JAGX. Today I did send out a message to all my Patreon members that I bought at $2.13. Exactly then, I think maybe it was at $2.11. I bought $100 worth of shares for our 1K to 10K penny stock challenge. I told them, guys, I see this as a buying opportunity. Guess what? It's pulled back since then. Am I upset? Absolutely not. I thought that was a good entry point relative to where I am on my main portfolio, which again, I got in at $1.78, but it's pulling back significantly from its high, and there's only good news surrounding the company. Senseonics. What's going on with Senseonics? Guys, again, we're looking for that 180-day FDA approval for their 180-day glucose CGM device, continuous glucose monitoring device. Look at from its, just even 5-day. I'm not going to even look at its high because we know its 52-week high is 569, but just in the 5-day, down 23% almost, and then even 10% in the aftermarket. Zomedica, our baby, $1.78 in the aftermarket. These were retesting numbers from way back when. This was before the first week of February. So we've lost, a lot of the gains that we've made throughout the month of February, pretty much. It's like we're going back to January, like this month never even happened. And of course, that hurts inside, psychologically speaking. And that fear that we have, like, where's the bottom? Where are we going to find it? That's true. And I totally am with you. Don't get me wrong. BHTG, another one of our favorite plays. Guess what? Down 12% on the day. On the 5-day, let's look where it's at. Down 23%. +2 in the aftermarket. Guys, I'm only showing you this because, again, I am with you. These are the plays that I have invested money into, and significant amounts of money, and I saw my portfolio get hit. But again, why am I making this video? Because I need all of us to realize, again, not financial advice by any means, but look at the people who have successfully navigated the market landscape, right? And the one thing I need you to all address is, don't look at the 1-day charts. We focus on that too much. Don't look at the 5-day chart. Look at the 1 year. Look at the 5-year. for any of these companies. Okay, Acasti Pharma, I don't want to use penny stocks, but let's go back to the S&P 500 because again, this is kind of the market trend over 5 years. So if we look at the 1 year for the S&P 500, look at that. Yes, the pandemic, we got hit hard in March. It's recovered very nicely since then. Let's look at the 5 year. When you zoom out and take a second, instead of focus solely on 1 day, 1 week of bleeding market, you'll realize ups and downs come along, but the overall trend of our market, especially in stock plays that have, these are the top 500 companies in the US, over time, it's always this, it's pretty linear, but linear growth in the positive direction, never negative. And that's just how our market system goes because again, overall here in the United States, we have a pretty healthy economy. Yes, we're in a lot of debt. Yes, there are a lot of negative things around it. But regardless, the companies, the tech companies, whatever it might be, the top 500, the Fortune 500s, all of these companies do well over time. They have additional revenues, new products coming out. And that's what it is. All of our plays, Jaguar Health, more products are coming out. Again, I know they had a very insane run up in the last few months, but do I see it pulling back all the way back to 26 cents? I don't foresee that happening because again, a lot of good news and good catalysts have come out for these companies. Senseonics, same thing. We'll look at the 6 month. I know it was just in the 40-cent range end of December. A couple months later, now it's at 381. So if you look at it like that, you're up 829%. Sure, if you bought in at 527, you're hurting a little bit. But guys, again, we've seen it. It goes up, down, up, down. That's what it is. Volatility is very normal. Now, a lot of uncertainty is in the market currently. Zomedica, I'm going to give this one its right because this is one that I've focused on heavily. But again, everyone asked me, have you sold your shares? Are you worried? Absolutely not. The True Forma is still going to launch end of March. And that's a for sure thing. That's a 100% certain thing according to the company, right? There's no delays as of right now. They would have given us an update by now. They were able to do an initial or a direct offering earlier in February, which again gave them, I think it was a few $100 million to, and specifically they want to help with marketing and launching of the True Forma. So again, why are we focused on the 1 day, the 5 day? Look at the 1 month chart. Look at where we were before, and again the ups and downs that we've seen since then. And yes, don't get me wrong, please. The big thing is we are seeing, this is a significant pullback. And you could even say, it's a pretty strong market correction. But regardless, I think all this means for me is to increase my position sizes and try to average down from my current cost basis. So as you guys know, I'm going to keep using the penny stock challenge as a milestone or an example for my videos for the time being. But my average cost for Zomedica, $2. It's currently at $1.78. That's another buying point, in my opinion. It's a time to maybe average down, buy in, another 100 shares. I haven't yet, but it's something that I'm potentially going to consider tomorrow. So I will plan to do a live stream, hopefully tomorrow or this weekend sometime, to talk about kind of what I want to do with some of these plays. Hopefully tomorrow in the pre-market, if I wake up early enough. Again, Friday's my day off, so I try to sleep in if I can. But regardless, I think a lot of people need to hear these things because I know people are worried and people are asking me for motivation, and I don't want to give you this, this false hope because again, the market can continue to pull back. But remember, all your losses that you're seeing in your portfolios are unrealized, just like your gains, right? If you're up 100, 200, 300, 400% in some of your plays like Zomedica and at 40 cents, currently at $1.78, still a significant gain. That's unrealized gain until you sell for a profit. Same thing for the losses. Remember, it's the same way down. If you don't sell and you're holding it, it's still just an unrealized loss. So, whatever it might be, if you're someone that's more short-term, looking to swing trade, obviously you're hurting today because, again, if you bought stocks yesterday or the day before in the dip and it's pulling back down right where we were, just on Tuesday or so, I know that's painful. And I'm hoping we don't retest those numbers because we did see strong levels of support. But, this V recovery is, as a lot of people have been calling it, we're not really seeing that necessarily with today's pullback. But again, it's time to potentially increase position sizes in companies you believe in. It doesn't have to be Zomedica. It doesn't have to be these penny stock plays because, again, they're a lot more volatile. But pull up the chart for Tesla. Let's just do that quick here before I end the video. Look at Tesla. It's down 10% on the day. That's unfathomable. Like, I would never imagine that Tesla would pull back this much. At $668, guys, if we look at the 1 month, it was at $883. It's down 24%. For Tesla, again, it's this beast right here. This is a company that's changing the whole idea behind electric vehicles and even energy. So if you're someone that's interested remotely in this one and you were looking into getting in due to that fear of missing out when it was in the 800s, look at the price now. What's stopping you now from getting in? Because I think right now is what you would call a buying opportunity. Can it pull back some more? Possibly. It's had its significant run up, but I don't foresee it going back to where it was, kind of consolidating even before it got into the S&P 500 at the $400 range. Because again, it very well could. Don't get me wrong. I can't tell you what's going to happen tomorrow. But all I'm saying is, adopt that Cathie Wood mentality. Adopt that thought process that, hey, maybe I can average down. Maybe I can buy the dip instead of panic selling, and getting disappointed. I saw someone on Discord. I forget the name exactly. I think it was Victor, but he mentioned that, I'm going to sell all my shares and just not trade anymore, and I'm out, leaving the Discord. If we adopt that kind of mentality, I told you guys, always put money in that you're willing to lose. But if you have that kind of mentality, those are the people who get burnt the most. And remember what Warren Buffett said. Like, I saw a quote from him earlier today. He said that the stock market is specifically for those who are patient. So a lot of people who are impatient will lose money. Those who are patient, you'll realize that recoveries will happen. And again, we're going to see it bounce back up. So again, I just created this video today to kind of give you guys just a reminder to adopt this lady's mentality right here on the screen. So as always, thank you so much for tuning in. And until next time, everybody, keep investing.